Hello and welcome to another update video about Solana. Solana is currently following well this recently adjusted Elliott wave trading triangle wave count. Mentioned that yesterday that I'm tracking a triangle here now due to the latest price action and the ongoing weakness. And the recent break of the $147 level, even though it was not sustained, but yeah, the market still shows weakness. And it currently looks as if we are following here this trend line to the downside. And I've added a target box to the downside, which is valid as long as we are holding below the trend line. Yeah, as long as we're holding below that descending dotted trend line here on the chart, my assumption is that we're now coming down in this C wave. This is now getting a little bit more clear. Yesterday, I only showed you that we probably topped in a B wave, but we didn't have any downside momentum, or at least no substantial downside momentum in wave C of Y of C. Quick explanation. What is the overall context now? The overall context is still, and that's been unchanged. Well, it's been unchanged for the last 3 months. Okay, the idea is and was that we have started a fourth wave. Fourth waves tend to be either flat corrections or triangles, so sideways corrections typically. I think that's exactly what we see here. It's a boring sideways correction. And in a correction, we have to be prepared for let's say, changes of the microstructures. We're currently dealing with probably a triangle. I would not be surprised if this changes, this assumption, but the triangle pattern works actually quite well here at the moment. If we take a look at this chart, we have from this third wave top, which, well, reached the March high and where the market topped around $209, we have an initial move down, which I'm labeling as wave A. We have a rally after that, which I'm labeling as wave B. This here could now be the C wave to the downside. I've calculated a target zone that's just based on the internal AB structure of the Y wave. We can add some other levels in this video. As soon as the C wave is done of the triangle, I'd be watching for another DE pattern, okay? This is only valid as long as the price holds above $119, above the A wave low that was formed on the 13th of April. Because any break below $119 will invalidate the triangle pattern as it is and would likely send us down into the lower support region, into the area below $109. This would still be a fourth wave. It would just mean that we're not working on the fourth wave as a triangle, but probably as some kind of a WXY structure here or so. Yeah. Either way, in none of these scenarios, I have the confidence to call a overall low in place. Okay, so that's unchanged as well. I still think we are in a correction here, and that hasn't changed for the last few months. So the idea now in this microstructure is that the C wave is a complex correction, a so-called WXY pattern, and we are currently likely moving in the Y wave of wave C, and then another DE pattern is needed. Now looking at the internals, if we take the length of the A wave of wave Y, compare that with the length of the C wave, it could send us into the region between $133 and $118. This would be an ideal target range. What we can add as well, we can add, so what we can do is we can take the length of the A wave and we go to the high of the B wave of the triangle, and a typical target is usually the 61.8 extension. So that points us to $133. So that's a good overlap with the 100% extension I have anyway on the chart, so I don't need to show that separately. But around $133 there seems to be, so that's the A equals C target, and there's some confluence there. So yeah, and then once we get there, ideally we get a bounce and a break above the trend line that would indicate the start of wave D, and then another higher low in wave E, and ideally then we finally go up. Even now, because we have not yet broken below the A wave low, which is here at $145, it's still possible that this B wave extends a bit. So, but as I said, you know, let's say to believe that I would need to see a break above the trend line. So as long as we stay below the trend line, assumption is that we're heading down more directly. So these fib levels can of course be used for trading, the trend line as well. But But overall, we're just in a range, okay? And it's a massive range. And this is like you could say a triangle range. It's between $119 and $190. Why are these the range boundaries? Because the $119 level is the downside invalidation point of the triangle. Any break below that requires a change in microstructure, and a break above 190 would indicate an upside breakout. That's my update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.